Hey, it's Anna Marie from ERA in Anniston, Alabama, and today I wanted to kind of talk about something that is weighing heavy on my mind. It has to do with housing, but it's not a normal topic that I talk about. Yesterday, Bernanke and the Feds announced that they were going to start buying $40 billion with a B dollars worth of mortgage-backed securities monthly until job growth increased. $40 billion worth of mortgage-backed securities. They also said that they were going to continue to keep interest rates low, if not lower than they are currently, which is about 4%, maybe even a little bit lower if you get a shorter than 30-year product. Keep them lower to help stimulate the housing market and continue the housing recovery. Well, without getting too deep into the politics of whatever, I just went and looked at the most recent housing information that's being put out there by the news media. So I started with USA Today. Their most recent article that they published in August 29th said that housing was recovering. We've had, the increase. It's increased year over year, 10% on existing sales, 25% on new construction sales. If you go to the National Association of Realtors website, they've got information where housing has been improving month over month this year so far. Interest rates have continued to stay low. I don't understand this move by the Fed to start buying back these mortgage-backed securities. Bernanke was quoted as saying that it should make buyers buy houses and it'll help with refinancing, but refinancing is great for the person living in the house and it gives them extra money to spend. But as far as housing is concerned, refinancing doesn't help people buy new houses. It keeps the people in the houses that have already bought them. So I'm just truly baffled by this move and what is expected to be accomplished by it. I personally think that the government has no business in housing, but there's nothing we can do with Fannie and Freddie at this point. They're already there, and it would be detrimental to just get them out quickly. So, I'm posing this question to my colleagues, my fellow realtors. What is the benefit, or what benefit comes from, the Fed purchasing these mortgage-backed securities in this dollar amount so quickly? And basically, they're printing money to purchase these mortgage-backed securities. And that, like I said, I'm not going to get into the politics of it, but, all indicators is that housing is getting better. If you look at Case-Shiller, which is, the S&P's leading indices of how the housing is doing and the direction that it's going, it's positive. So if somebody can help me, or, if I'm missing something of how this is going to help housing, please let me know. I personally think that a huge motivator of housing is consumer confidence. That has more to do with how people buy and sell houses than interest rates at all. I wasn't alive during the time, but apparently interest rates at one point used to be 17, 18, 19, 20%. People were still buying and selling houses then. Interest rates today are 4%, 3.5%, and people say that people aren't buying houses. They are, but the numbers are down. Well, obviously it's not interest rates. Interest rates help, by all means. I'm not saying that they don't, but I think a bigger indicator of what housing is doing is consumer confidence. So I'm open, I'm all ears. Please share your comments below. Email me, anna-marie@era-king.com. I'm interested to hear what my other colleagues say about the Fed's move from yesterday.